Nightly Business Report is made possible in part by the Jefferson State Bank and the Joseph and Bessie Feinberg Foundation.
The Fed say sayonara to Daiwa Bank, shutting it down and indicting the bank and its senior manager for running a scheme to cover up $1 billion of losses. Good evening. I'm Paul Kangas in Miami.
And I'm Kathy Seifert in New York. The Dow Jones Industrial Average closes the day at a new record, flying high on the wings of transportation stocks. And automakers play let's make a deal with their customers, offering rebates and incentives on brand new 1996 models.
Nightly Business Report is made possible by Digital, doing whatever it takes to make information work for people and not the other way around. Franklin & Templeton Worldwide formed the more than $125 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, going beyond stocks and bonds to help you create the right plan for a more secure retirement. A.G. Edwards, an investor's resource for more than 100 years. And is produced in association with Reuters, which provides news and market data on the equity, bond, futures, and foreign exchange markets.
Federal authorities moved today to shut down American operations of Daiwa Bank of Japan, accusing the bank and its managers of masterminding a cover-up to hide more than $1 billion in bond trading losses. And $1 billion in fines is what the bank could now face. Scott Gervey reports.
As complicated as the schemes used to avoid detection were, this is a case of cover-up, pure and simple.
Pure and simple. No question in the mind of the man who led the FBI investigation into Daiwa Bank. The indictment returned today refutes the Japanese bank's position that $1.3 billion in trading losses and doctored records were the result of a rogue trader. The indictment says that the activities of that trader in the bank's New York office were known by management both in New York and Japan. It accuses those managers of meeting with the trader in Manhattan in July and ordering him to continue the cover-up. They didn't inform American officials until September.
What allegedly occurred between mid-July 1995 and September 15, 1995 was egregious conduct, corporate conduct, and crimes at the highest levels of a major financial institution.
If convicted, Daiwa faces a $1.3 billion fine. But U.S. banking authorities are not waiting for a trial. The Osaka Bank has been ordered to shut down its operations in 11 states within 90 days. The bank calls the American actions regrettable and says it will defend itself against the indictment. It was little more than 1 month ago that the investigation began, and the speed with which it has concluded surprises legal experts.
If you were investigating this case with an eye to a successful prosecution, you would want to gather as much evidence as you could to confirm and corroborate what your informant is telling you. Even if he is speaking as honestly as he can, he, like the rest of us, doesn't have perfect memory. He may get things wrong.
U.S. Attorney Mary Jo White would not go into detail, but she did say that some of the people named in today's indictment are no longer in the United States, and that raises a diplomatic issue. It is not clear that they will ever be extradited here to face trial. Scott Gervey, Nightly Business Report, New York.
A hint of progress toward raising the debt ceiling bolstered bond prices early today, and that helped stocks extend yesterday's 11-point upturn in the Dow Industrial Average as it jumped another 27 3/4 points by 10:30 this morning, while market breadth turned 7-4 positive. The opening rally in the Industrial Average put it close to the 4,800 level, and as on previous visits to that area, selling picked up during mid-session today, cutting the Dow's gain to 19.5 points by 1 p.m. Meanwhile, the Dow Transport Index was soaring over 50 points, and that performance, plus further gains in bonds and frantic short covering, helped the Dow Jones Industrial Average surge to a closing gain of 41.91 points at a new record high of 4808.59, easily eclipsing the previous record set on October 19th by 6.14 points. The Dow's overall range today, 41.5 points, and as you can see, it closed at the very best level of the day, and it was in plus territory from the opening bell to the closing bell. Trading volume heavy, about 20 million shares more than yesterday, and right up around the 400 million mark. And look at the up volume versus down volume, 3 times as much of the up variety. The Dow Transports had a massive gain, up 60.5 points, better than 3%. Utilities edging up 1/3 of a point. The closing tick still quite bullish at plus 349. Standard & Poor's 500 up 5.5 points, and the similar gain in the 100, mid-cap 400 up 3.31, all nearing their previous or their record highs, a few points away for most of them. Commodity Research Bureau index up 0.87. The New York Stock Exchange Composite up 2.67, Value Line up nearly 3.25 points, and the Wilshire 5000 up over 60.75 points. All of these averages getting near record highs as well. After the market closed, the Federal Reserve reported in the week ending October 23rd, the M2 money supply fell $2.7 billion. A higher-than-expected rise of 6,000 in the latest weekly jobless claims helped bond prices open higher today, offsetting the report of a solid 1.5% jump in September new factory orders. A firm dollar was a plus, and so was a growing belief the debt ceiling problem will be resolved well before the debt default deadline. Tax-free issues ended up 3/8 of a point. Corporates gained 1/2, and the 30-year Treasury closed up 23/32, bringing the yield all the way down to exactly 6.25%. The Lehman Brothers Long Bond Index up just over 7 points, and Fed funds edged down just a bit from yesterday to close at 5 11/16%. Later, I'll show you where the action was on Wall Street today. Cassie?
The big retailers turned in very weak results for October today, with the worst same-store sales reports in 4 years. The Fitch Investor Service Department Store Sales Index increased only 2.8%, and the Discount Store Index declined by a small fraction. Joining me now with more on the retail outlook is Rick Church, retail analyst with Smith Barney. Rick, we're going into a critical time of year here now for retailers, and this seems like an awfully bad omen, is it?
Well, that's the way the numbers would suggest to be the case, but I think if you look deeper into the numbers and the comparisons versus last year, the comparisons become much easier, particularly for many of the apparel and department store retailers. Last year was a particularly weak period for them, so I think investors who do work in mysterious ways have read into that maybe October was the worst of the year, and that it's looking a little bit better as we look out over the next couple of months.
Do you expect this to be a good Christmas sales season for the big retailers?
Well, I'm a little skeptical about Christmas this year, particularly for the big retailers, and virtually anything having to do with apparel, I think, is probably going to have some sales, but virtually no profits attached to it. But I think the consumer always steps up to the counter, and they will buy for Christmas. Santa always comes. They're going to be, I think, budget-minded this year, so I think you have to be pretty selective, but I still think that there's going to be some retailers that will do particularly well.
Now, in spite of an overall guarded outlook, the stocks did awfully well today. Most of the retail stocks up about a point, and Dayton Hudson was up 5 1/8 at 73 3/4. How do you explain this?
Well, each stock has its own unique circumstances. Dayton Hudson, I think, is one where bad news might be good news. At least some investors might be reading that into it. With Dayton Hudson, investors are kind of hoping that there might be some restructuring that goes on with the company. So that would be one reason for that. And the stock had been particularly weak here over the last month or so, so I think it was due for a bit of a bounce. Overall, I think the move in the stocks was just that we'd reached a maximum point of pessimism with regard to valuations and as it compares to the outlook over the next couple of months.
Would you be a buyer of retail stocks right now?
Well, as I said, I think you've got to be very selective with retail stocks. I'm going to be quite persnickety with regard to fundamentals. There are some that I do suggest consumers buy and investors buy.
We're just about out of time. Could you give us one or two real quickly?
One of my favorite names is Kohl's. The symbol is KSS. They are apparel, but they also have soft home domestic merchandise. They're value-oriented, and they have a high growth rate. Sears, I think, is positioned very well this year. Good mix of hard lines and soft lines merchandise. A lot of remodeled stores coming on stream. And they had some good sales reports today, too.
All right, thank you very much for joining us.
Thank you.
Rick Church of Smith Barney.
Sluggish October sales are plaguing the nation's automakers as well, and many are using rebates and incentives to get customers into new cars. Some car makers even began offering deals on 1996 models a month ago. Diane Eastarbrook has more from Chicago.
Own a Honda, buy a 96 model, and the automaker will waive your first monthly payment. GM's offering a $1,000 rebate on its new Geo Tracker. This fall, incentives began arriving in showrooms almost as soon as the new 96 models began rolling onto dealer lots. Sluggish sales over the past couple of months are prompting a new round of deals. Yesterday, Chrysler reported a 2.8% drop in October vehicle sales. Today, the number 3 automaker announced a number of rebates from $500 to $2,500 on its 96 models.
Sometimes when a retail incentive like this comes out, a rebate, if you will, you know, perhaps it might be a somewhat of an admission the cars are priced a little bit too high.
Analysts say affordability is increasingly becoming a problem in the auto industry, both foreign and domestic. Overall, monthly car and truck payments are rising faster than incomes. Rising consumer debt is also keeping consumers from replacing vehicles. Dealers began offering incentives this summer to attract buyers, and many say customers now won't buy unless a rebate or lease incentive is part of the deal. Toyota says it began offering incentives shortly after its 96 models went on sale to keep showroom traffic moving. Analysts say incentives are partly to blame for lower earnings this year and will continue to be a problem for the rest of 1995.
Well, incentives do eat into profits very directly and very quickly. The producers prefer not to have incentives at all, so they're very wary about putting them on in the first place because it's very difficult to wean consumers off of incentives once they are placed on.
Most analysts expect to see aggressive incentives continue until spring, with the best deals on luxury cars, compact cars, and possibly minivans. Diane Eastarbrook, Nightly Business Report, Chicago. Republican leaders say they'll vote next week to raise the federal debt limit. That's good news for investors. The bad news is Republicans may also escalate their confrontation with the president by including other measures, such as abolishing the Commerce Department in the same bill. And as Dennis Moore reports, the standoff is already affecting financial markets.
Senate and House Republicans trying to resolve their own differences on details of the budget plan weren't talking about any compromises with Democrats.
They're not going to furnish a single vote for the package, so we're going to talk with them.
And President Clinton took the occasion of an anti-drug speech to repeat his refusal to let Republicans use a debt-ceiling bill to force him to accept their social spending priorities.
We can deal with our budget problems in Washington without walking away from our values and our responsibilities.
So far, financial markets have not been unnerved by the apparent stalemate in Washington, but that doesn't mean it's leaving them unaffected.
The important thing to realize about the impact on the financial markets is that the lack of new debt issuance by the Treasury is limiting the amount of securities supply in the system.
But there's no corresponding limit on bidding for Treasury securities, so investors have been bidding up prices and bidding down interest rates on short-term Treasury debt. But AAA-rated corporate borrowers, such as your local Baby Bell, are still having to pay rates based on the 5 3/4% Fed rate for overnight borrowing.
So, in a sense, it is something of a tax in that the pristine credit rating that a lot of these corporate issuers have, they're not being allowed to take advantage of it.
The Treasury will have to play catch-up once the budget deal is done and the debt ceiling lifted, and the market distortion will disappear. But that flood of new Treasury debt could produce an overcorrection with excessively high interest rates then. Dennis Moore, Nightly Business Report, Washington.
Still ahead on Nightly Business Report, instability continues in the banking system in Japan, and the country's banks are now being charged a premium by other nations for their business.
A record day for the Dow Jones Industrial Average, and a lot of other averages are very close to making records or tying the previous ones. Let's have a look at the closing Dow, up 41.91 at a record 4808.59, easily eclipsing the previous one by 6 points and then some. And look at that broad market advance, more than twice as many issues higher than lower, 133 new highs for the year, only 21 new lows. Topping the active list on a heavy 15.4 million shares, Kmart moving up 1 1/8. Quoted on the street today was money manager Robert Rank, who's very bullish on the stock, and he's looking for $15 to $20 a share within 1 year. Micron Technology down a half, little softness here and there on the high-tech stocks today. Upjohn did well, up 1 3/4. Its merger with Pharmacia was completed today. Walmart moved up 1 1/4. Its September same-store sales rose 2.6%. K3 Communications was a new issue today. 15 million shares offered at 10, opened at 10 3/8, traded as high as 10 5/8, closed near the high. Companies involved in educational magazines and books, among other things. Ford Motor rising 5/16. Merck was down a half. Goldman Sachs downgraded Merck from a trading buy to a moderate outperformer. USX Marathon moved up a quarter. IBM, the biggest point gainer in the Dow Industrials today, rising 2 3/4 points. And Home Depot did well, up 2 3/8. AMR, parent of American Airlines, up 3 1/4 points, helping that Dow Transport Index rise 60 1/2 points, as did CSX with that gain of 3 5/8. General Re up 5 1/2 points. Company out with third quarter operating earnings nicely higher, $2.43, up from last year's $2.12. Pfizer dropped a half. It, too, was the victim of a Goldman Sachs downgrading, just like Merck. Goldman Sachs downgraded it from a trading buy to a moderate outperformer. UAL, parent of American Airlines, up 7 3/8. The company said it'll decide by next week whether to bid for U.S. Air, and that the employee owners will also have a say in whether they do. United Health up 3 1/4. Third quarter earnings nicely higher, 53 cents up from last year's 46 cents, and the company said it had record enrollment gains in the quarter. Allen Group, which is involved in the manufacture of electronic products, up 3 full points. Third quarter earnings 28 cents, up from last year's 21 cents, and sales were up 60%. Best Buy up 2 3/8 points. October same-store sales rose 13%. Total sales up 50%. International Game Technology rising 1 1/4. The company sees fiscal 95 earnings due out a week from today, right in line with Wall Street estimates. The Gap Incorporated up 3 7/8. October same-store sales up 2%. Total sales up 17%. Premark International up 4 1/2 points on news it'll spin off its Tupperware unit through a stock distribution to its shareholders. Prudential Securities out with a buy today, as did Hancock Institutional Securities come out with a buy. Finally, just to prove there was a loser, Asia Pulp and Paper, the biggest percentage loser, down 1 3/8. It's a Singapore-based company with most of its operations in Indonesia. We were unable to get through. NASDAQ trading a rise of 16.82. That's the equivalent to a 77-point gain in the Dow Industrial Average. Volume brushing 500,000 shares today, 500 million shares, I should say, and 20 stocks up for every 15 lower. Intel topped the active list up 2 1/16. Of course, Andrew Grove, the president, was on the program here last night and made positive comments. Today, Merrill Lynch made positive comments. Microsoft up 1 5/8. Cisco Systems rose a full point. Applied Materials a 3 1/4 point advance. Sun Microsystems up 2 1/2. Intuit up 4 more points. Yesterday was up 6 3/4 on positive comments from the Nidegger Tucker Bruner brokerage. America Online down 1 1/8, little profit taking after announcing a 2-for-1 split earlier in the week. Bay Networks up 2 3/4. Oracle up 1 3/4, and Adobe System up 3 5/8. Immunex did well, up 3 11/16. American Home Products is going to buy the 45% it doesn't already own for $14.50 a share cash. Spyglass up 13 1/4 points. Yesterday it had nicely higher fourth quarter earnings. Today the Alex Brown brokerage upgraded the stock from neutral to buy. And Bradley Pharmaceuticals down 3/4, big percentage drop. The company reported a third quarter loss of 45 cents a share, bigger than last year's loss of 7 cents. The American Exchange Index up 5.40. Trading volume up 7 million shares from yesterday, about 3 stocks higher for every 2 lower. Echo Bay Mines, the Canadian gold on 2 million shares, topped the active list, rising 3/8. Gold in New York about 40 cents an ounce gainer. Hampton Industries, which manufactures shirts and blouses, up 1 full point. The company had lower third quarter earnings, a little bit lower, 38 cents versus 41, but says it expects a good fourth quarter and a profitable year overall. Finally, Thermolays up 2 1/8 points. The company's chief financial officer made positive comments before a investment conference yesterday, and he also made positive comments to us today. And that is our Wall Street wrap-up, Kathy.
No, the Daiwa Bank scandal is just one example of the problems facing Japan's banking industry. And as Reuters correspondent Dan Sloan reports, Japanese bank profits are expected to fall sharply this year due to the payment of premiums to foreign banks.
Japan's financial markets have become accustomed to surprises in a year that has defied prediction. So the latest irony, that banks from the world's largest creditor nation are paying a Japan premium to other nations' banks, is raising few eyebrows. The premium has dipped from a peak of 100 basis points last week as supply demands have eased. But the premium's impact on financial institutions and the markets is undeniable.
Psychologically, especially investors are still worrying about the potential new development in relation with Japan premium.
BOJ Governor Matsushita said last week that the Japan premium could affect banks' profitability. And Merrill Lynch now estimates that the premium will cost Citibanks $60 to $90 million in profits this fiscal year. With such an outlook, investors have sold bank shares, sending the Nikkei stock average to 11-week lows. The currency market has also felt ripples from the Japan premium, as the spread between dollar-yen spot and forward rates has widened. Japan's Bank Association chief says he doesn't expect the premium to disappear until the institutions police themselves.
And I believe that this will continue to some extent if we do not take prompt actions to resolve the issue of non-performing assets.
Analysts say some major Japanese banks have paid the Japan premium simply because of other institutions' instability and a lack of transparency. Those banks will likely reveal details of their non-performing loans earlier than planned to reduce or eliminate that premium.
Smaller institutions where much of the problem loans aren't expected to do so, which could lead to the premium being applied mainly to those banks that deserve it. Dan Sloan of Reuters for Nightly Business Report.
Coming up, economist Burl Sprinkle on incentives for balancing the budget.
Capital Cities ABC and Walt Disney have both set tentative dates of January 4th for shareholders to vote on Disney's proposed buyout of Cap Cities. The date is subject to SEC approval.